Hello, this is Craig Thompson with Asset Solutions. The bulk of the underlying technical evidence is suggesting that market risk is high both on a long and a short-term basis in the stock market. What is this suggesting? Well, it's suggesting that the path of least resistance in the short and long term is down for stock prices. Now, in our last update that went out at the beginning of this month, we showed you three charts which highlighted market momentum. I am real quickly going to go back and revisit these charts. Then I am going to show you one new chart that I think best determines whether we are in a risk on or a risk off environment. Now, why is this important? It's important because during bullish market environments, you typically see your riskier stocks outperform, and during bearish market environments, your more conservative stocks outperform. So let's go ahead and get started.
Before we dive in, please keep in mind that all content is purely education. It is not intended for you to use to trade your own account, nor is it a solicitation for business by our firm, Asset Solutions.
All right, in front of you is the home page of our website, and this is where we archive all of our content. If you go to blogs, this is the tab where we archive both our stock and bond market blog and our crypto blog. So if you hit this link right here, it takes you to the stock market blog. Now, if you're not currently getting these updates, you can sign up right here. It is of no charge. And as they're published, they get emailed directly to your inbox. This is the last update that went out on April 4th. And I highlighted three charts that we focus in on market momentum. So this is our monthly long-term chart. And as I highlighted in this newsletter, you can go back and read it if you're interested. But the main points are that on a monthly long-term chart, stock price is elevated and market momentum has rolled over by virtue of this indicator right here. The MACD is now fallen below its moving average, so it has rolled over to the downside. And if we look at the daily chart with that same MACD indicator right here, we highlighted how at the time when we published this chart, April 4th, that market momentum had not rolled over yet on the daily chart. You can see here it flattened out, but it had not rolled over. Since then, I'm not going to show the chart, but with the recent weakness that we saw last week in the S&P 500, momentum has rolled over in the MACD on the daily chart. And the last chart that we published was a momentum chart of the Russell 2000, which is a small cap index. And like the S&P 500, the MACD had flattened out, but it had not rolled over. We were projecting that it would. And with the weakness that we saw last week in the market, the MACD has also rolled over on the daily chart with the Russell 2000. All right, in front of you is a chart that I think does an exceptional job of helping us determine whether we are in a risk on or a risk off market environment. In the top panel, I have a daily line chart of the S&P 500 going all the way back to June of last year. I have three vertical lines that I have notated on the chart at areas of special interest. This first horizontal red line here is placed right at the highs that were hit last year. And I've got a green line right here that is set right at the lows of last month, and a red line here at the short-term peak that was hit recently. Then in the middle panel here, we have a relative strength chart where we're comparing the performance of our risk on asset semiconductors relative to our risk off asset consumer staples. And in the lower panel, we have a relative strength chart where we're comparing the performance of small cap stocks relative to the S&P 500. So let's start with the middle panel. When semiconductors, which is our risk on asset, is outperforming consumer staples, this line is rising, and that was the case all the way up until the beginning of December. Then as the market advanced in December, we actually saw semiconductors start to underperform. That underperformance continued throughout the market pullback that we saw from the beginning of this year through the middle of March, because this line is falling. Now, with the recent short-term bounce that we've seen in the market right here, we did see the line go up, indicating that semiconductors was starting to outperform, but this bounce in relative strength is pretty minor. We know that because we can look here at the price action in the S&P 500, and notice with this advance, this peak is slightly higher than the highs that were set here at the beginning of February. So now we compare that to the peak that we saw in the relative strength chart. You can see that this high is slightly lower than this high. So this advance in relative strength was not necessarily all that strong. And more importantly, look what has happened since that short-term market peak that we saw at the end of last month. You see a strong move down in relative strength. Semiconductors are substantially underperforming consumer staples. And look how severe this move down is relative to the move down that we've seen in the market. So we've seen price action in the S&P fall, but price is still well above those March lows. But when we compare it to the relative strength chart here, you see price, or the relative strength chart, is well below where it was back at those March lows. Now let's go ahead and look at the chart in the lower panel, which is where we compare the performance of small cap stocks to the S&P 500, small caps being our risk on assets. And small caps have just continued to underperform the market going all the way back to the middle of last year. You can see the S&P advancing into the highs that were hit at the end of last year. But throughout that entire move higher, small cap stocks were underperforming the market. Now, if we look at this chart and we highlight just what it did while the market was going through this major move down from the peak here through those March lows right here, we had small caps continue their underperformance, but we had a glimmer of hope right here, because this line moving up as the market was making this move down off of these peaks all the way down to the March lows, small caps actually were starting to outperform. So there was a glimmer of hope that we were starting to see more of a risk on environment. But that ended pretty quickly once stock prices bottomed on a short-term basis in March. The line resumed its downtrend, and we see underperformance not only during that short-term advance, but it has continued throughout this short-term weakness that we've seen over the past week. So in summary, we are in a decidedly risk-off environment where semiconductor stocks are substantially underperforming consumer staples. And that underperformance has accelerated with the short-term weakness that we've seen in the market over the past week. And we've seen an acceleration in underperformance by small caps starting again right here off of those March lows. All right, so in summary, here is what we know. We know that stocks are extended to the upside on a long-term basis. 2, we know that market momentum has rolled over and is now negative on both a long-term and a short-term basis. And 3, we know that we are in a decidedly risk-off market environment. All of this is obviously bearish, and there is a host of other charts that we monitor on an ongoing basis that are also supporting this bearish market thesis. I haven't shown them to you here today because I wanted to keep today's update brief, but I do plan on publishing some of these charts in the coming days and weeks, so keep an eye out. Now, if you are someone who is concerned about how your portfolio is going to perform in this bearish market environment, we do offer a free, no strings attached, 1-hour consultation where we will review your investment strategy and your existing allocation and give you an idea as to what our thoughts are. So if you're interested in that, go to our webpage. This is the home page, and if you go to the bottom, you'll see this tab here. Click here to request a meeting. Then when this page loads, go ahead and enter your name, email address, phone number, and message right here. Hit submit. Once we receive that request, we will follow up with you and we will suggest that you send us a copy of your most recent investment statement. We will analyze your holdings in addition to your investment strategy, and we will share our findings with you in a complimentary, no strings attached, 1-hour Zoom meeting. All right, that concludes today's update. If you have any questions, please feel free to shoot me an email. I hope everyone has a wonderful week.